Hi there, this is Alvin from Dr. Wealth. Recently, I noticed something about the markets. There's possibly a sector rotation that's happening. We saw that in 2022 when the commodity related stocks were doing so much better and the tech stocks were taking a beating. That was the inflation era. And now the inflation seems to be under control, right? Interest rate hike has been working, but somehow the commodity prices are running up again. Give you a sense of it, this is just a percentage change of selected commodities in the past 1 week. Wheat is up 9.9%, right, almost 10%. Corn is up 5.5%. The crude oils were up 5 to 5.1%, and natural gas was up 3.8%. So if inflation is under control, why is the commodity prices creeping up? The commodity prices actually lead the inflation rate. You think about this because inflation rate is only reported for the past month, and commodity prices are spot prices, and even they can be futures contract, which is more forward-looking in their nature. And with commodity prices going up again, it might mean that inflation might creep up in the next few months' report. So this is definitely a watch area that every investor should be looking at, because if the inflation gets out of hand again, the Federal Reserve may hike interest rate aggressively once more. There are of course certain drivers that cause the commodity prices to go up. These are the possible ones. So the first is that we know OPEC Plus have been talking about cutting supplies, and they have agreed to do so. So in the next few months, at least you will start to see the supplies coming down. And there's also the unresolved Russian-Ukraine war. It is still ongoing. So Russia have also banned Ukraine from exporting its grains out of the Black Sea, and that is probably what caused the wheat prices to go up a lot, because Ukraine is one of the major exporters for wheat. And China also vowed to stimulate the economy, so market participants may anticipate the increased demand for energy sources. So these are the possible reasons that may cause the commodity prices to be running up. Of course, we don't know how long it will be sustained, but based on what we see from a technical perspective, let me just blow the chart for you. This is the Brent crude oil price, and what I want you to focus on is the moving average, which is a red curve that you see on the screen. That is typically a long-term gauge that I use. If the prices are below a red line, means it's bearish. If the prices are above the red line, means it's bullish. So we can see for the first half of 2022 and even the second half of 2021, it has been quite bullish for oil price. And then thereafter, when interest rate hike happens in June, that price of oil started to come down until recently. You can see that the prices started to go above the moving average once more. So this might be a sign where a change of trend might be happening. Okay, so if that happens, that means oil prices will have more legs on the upside. And the same can be said for the WTI crude oil price, right? It's very similar in the movements with Brent crude, and this is also above the 200-day moving average. So oil price is definitely a watch area, and let's say you believe that the oil price is going up and you really want to capitalize on it, making a profit out of it. Usually you will need to dabble into derivatives like futures or even contracts for difference, and definitely you will need more product knowledge to really understand how to do it properly. Otherwise, another way is of course to invest in oil and gas companies, especially the upstream players, because they are the ones that will benefit more from high oil prices. Of course, you know a lot of big names like Shell, ExxonMobil, Chevron listed in the US, but wanted to share something that's more local to the Singapore investors, and that will be this company called PTTEP. So it is a Thai company, it is an oil and gas company, but it is traded on the SGX. So you can buy and sell it as what you have been doing with other Singapore listed companies. Let me just give you a little bit of their business and as well as their financial performance. So the first thing I want to highlight is their unit cost of producing a barrel of crude oil as well as natural gas. So in the Q1 2023, right, in the third column, you can see that the 1 barrel would cost them about $26 to dig out from the ground. And if we look at the selling price, right, in Q1 2023, which is again in the third column, the combination of crude oil and natural gas is about $50 per barrel. Okay, so if you take a look at previously at $26 and now the selling price is $50 on average, they almost make 100% at the prevailing gas price and crude oil price. So it's a rather lucrative position to be in. Their costs are low enough for them to make a very substantial profit. So if you believe that oil prices are going up even further, that would mean that this PTTEP will make even more money as their margin expand, because the cost of producing may not rise as fast as the selling price of crude oil. Now let's come to their financial metrics to compare their fourth quarter and their latest quarter one results. You can see that the margin has been good, as we have discussed so far, because their cost price is pretty low and ROE is in the teens, right? Even in fact, it has gone up from 15% to 17% from a quarter ago, and net profit margin above 20%. So these are really very healthy margins that we are looking at, and the debt is not high, right? And typically for oil and gas company, they usually require a lot of capex and they need to probably borrow money, but in this case they are pretty low, right? A debt to equity of only just 27% is almost unheard of in a high capex industry. So definitely their financial metrics looks very solid. And the next thing is their dividend history. You can see that in the past 6 years they have been giving dividends every single year. They give dividends 2 times a year. And I want you to note in year 2020, okay, it's a special year because it's a COVID year, and that was also the year that oil prices went below $0. I still remember it was a pretty crazy period. How can oil price become negative? Because they had no place to store the oil and people just want to get rid of it. And yet that year they still managed to give dividends. Okay, they did cut the dividend. I still consider a generous amount because of that bad year. And thereafter, when the oil price recover, you can see that they give a record dividend in 2022, almost double from a year ago. So we can conclude that this PTTEP consistently give out dividends in good times as well as in bad. The next thing, I just want to show you visually how does the PTTEP share price move with oil prices as well as natural gas, because these are the two products that they sell and they tend to move in tandem. You can see the orange line is the natural gas price, the blue line is the oil price, and then the candlestick is the price of PTTEP. And you can see that even though the volatility is different, natural gas price is a lot more volatile, but the direction that they move in are largely similar. So you can be assured that this would be a very good proxy play. If you believe that oil prices or even natural gas prices are going up, it would likely mean that the correlation would also cause PTTEP price to go up. Next, let's look at the valuation, right? So in terms of PE ratio, it is at 8 times, and we also want to look at the forward PE, which is expected to be about 10 times. That's still a rather undemanding PE ratio. And looking at the average PE ratio of 15 times, you can say that it is currently slightly undervalued. And in terms of your free cash flow generation, it's at 15% and the average free cash flow yield is at 14%. Okay, so again, this is slightly undervalued, right? Because the yield is higher than average. And the last one will be dividend yield of 5.8% versus the average over 5 years, dividend of 5.3%. Again, there's some slight undervaluation over here. Overall, the valuation for PTTEP is still attractive. In summary, the commodity prices have been on the rise and it remains to be seen whether this trend will continue, but definitely it is a watch area for all investors, because if the trend comes back, means inflation may come back, interest rate hike may happen again, and that will cause sector rotation to happen, selling of tech stock, bonds, fixed income, and going back to the commodity related stocks. One significant milestone is that now the crude oil prices are above their 200-day moving average, right? That might signal a start of their bull run again. And if you want to take advantage of this rising oil prices, one way is to buy into an oil and gas company that is a seller of this crude oil as well as natural gas, and PTTEP can be one consideration, especially if you don't want to invest overseas directly. You can now do it via SGX, because this PTTEP is traded on SGX via a mechanism called Singapore Depository Receipt. But all in all, you can just buy and sell like what you usually do for Singapore stocks. And moreover, I would believe that it's actually relatively safer to get into PTTEP than buying the crude oil derivatives directly, right? Because those derivatives requires more product knowledge to understand really how they work. You need special trading accounts to do it. But this PTTEP can just be done via a normal brokerage. And moreover, it gives dividends. If you're buying the crude oil directly, you are not going to get any dividends from the oil, or neither is natural gas going to give you any dividends at all. So that is a good way, and it does have financial metrics for you to analyze. You have disclosure, you have annual reports, and you have investor presentation slides. So you do have a lot more information to make a more informed decision. So that's why I always prefer that if you really want to capitalize on the rise of oil prices, one good way is always to look at some of these upstream players. Hopefully you find this video useful. Give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.